Welcome back, everyone. Welcome back to a new video. I know I've been quiet for a while without releasing any video or some analysis for you guys, and I'm really sorry for that. It's just that I've been having a lot of academic pressure on my side since I'm a student. So for now, I would like to say that I've resumed, and please be patient with me. Please bear with me because I'm also busy with my studies, but I'll try to balance my time. Just that the past few months it has not been easy for me because it was academic pressure and I was still grieving since, for those who know, I had a loss this year. I lost my mom, so I've been grieving, but we're not gonna focus on that. Let's get straight to the video. We'll discuss others as time goes by. So I'll just be analyzing as per usual. So this will be the technical analysis for the week, but I'll keep updating you guys as I always do. If I don't update you guys with a video, I will be dropping post on my Facebook timeline. So we'll firstly start with NASDAQ, since it's a common pair for everyone. Most of the people are focusing on it. So we'll firstly start with NASDAQ. So as you can see on NASDAQ, the monthly time frame, we firstly start on the monthly time frame. We'll firstly check where the current market price is rejecting from. So as you can see in NASDAQ, the current month, which is August, as you can see, it has been rejecting from this drop base rally demand zone here. Okay, as you can see, this was a drop, then the price moved sideways here, which is a demand zone, then started rallying with a significant move away from our base here. So as you can see, it was a demand zone and the price is rejecting from this monthly demand zone here. So let us check on the weekly time frame. As you can also see on the weekly time frame, we can see that the price was rejecting from this weekly demand zone here, which is within the monthly demand zone. As you can see, it was a drop base rally. The price came to test it for the first time, then started rallying again. Then the price came to test it for the second time here. So we can say that the price is rejecting from a monthly and a weekly demand zone. Okay, in that case, we say that NASDAQ is bullish. So if NASDAQ is bullish, we'll have to go to our monthly. So we will have to go to our daily time frame to look for a fresh daily demand zone, whereby we will be looking for our buy opportunities. Okay, so in that case, as you can see here, we have a drop base rally demand zone. Price came to test it for the first time and started rally. So let us look within this range here. This week here, we might find a demand zone or an ongoing activity around this area here. So let us try to refine our zone in the smaller time frames. So we'll firstly start on the 4-hour time frame. So as you can see here on the 4-hour time frame, we cannot pick this as our zone because the zone is not fresh, and also the price did not move away from our zone with a strong manner. So let us keep looking on other smaller time frames. We are not done yet. So as you can see here on the 3-hour time frame, we had a drop base rally. Price came to test it here and left a fresh zone here. So let us check this zone here. As you can see, it's low risk. Let us mark it, but we are not going to focus on it alone. We'll keep looking around this area here. Okay, then we have another drop base rally here on the 2-hour time frame, as you can see, which is below this rally base rally, or what you may call on the 3-hour time frame. So let us mark this too for the 2-hour time frame. Then you can see that we also have a drop base rally here below. So what I will suggest is you focus on the demand zone that is low on the range. The reason why I say you focus on this one here is because of it is the one that is causing this whole upward movement here, or all this rally here. Okay, it is the origin of this upward move that has occurred here. Okay, so as you can see, we had a drop base rally in price here, then the price came to test it for the first time, then left the fresh zone here. Then you can see that the price left with a strong or significant move away from our zone. Then we can delete these zones here because they do not give us a greater low risk and high reward risk reward ratio, like we always say. So we'll delete our daily, demand zone here. As you can see, this is our demand zone on NASDAQ. So there are a few things that I haven't been talking about on the previous videos. Okay, so which is the keys or the factors that we look at for us to determine whether our zone is low risk or not. So I'll only mention two for now. I'll only mention two for now. Then after grasping them, after you guys grasp them, then we'll move on to other concepts. Okay, so one of the things that we look at whenever we have to determine whether our zone is fresh or not, the first thing that you have to look at is time spent at the level. Time spent at the level, or time spent at the zone. Okay, so as you can see here, as I wrote, it's time spent at the level or time spent at the zone. What I mean by that is always make sure in your zone, always make sure it's always there that it's a minimum of 3 to a maximum of 6 candlesticks within your zone, of which means there must be a minimum number of 3 candles. If it's below 3 candles, then we cannot pick that zone as a strong zone. So as you can see here in this zone, we had this zone, this candlestick here, then we had this bearish candlestick too, then this bullish candlestick with a significant move, of which means we have 1, 2, 3 candles. Okay, then a maximum number is 6 candles. So as you can see here, this one is meeting the requirement. Okay, so we have 3 candles within our zone, which makes it high probable. Okay, so the second one that we'll look at is the second one that we'll look at is how did price leave the zone. The first one. Then the second one is how did price leave the zone, or we can call it the departure. Okay, so on the second one, how did price leave the zone, is whereby we look at the manner of our price when it was leaving or departing from our zone. So as you can see, this is our base here, or we can say it's our zone with 3 candles within it, or 3 candlesticks. So we'll focus on this candle here, which was leaving the zone, or which was departing from our zone. So always make sure that the first candle that leaves your zone should be a strong or a significant candle, of which we call it imbalance, of which means these 3 candles here, these 3 bullish candles here are our imbalance, okay, from our zone. Our imbalance from the zone. Okay, so always make sure that the price leaves your zone in a strong or significant manner. Okay, so as you can see here, the candle that was leaving our zone, or the candle that was departing from our zone, it's this bullish candle here. As you can see, it was leaving with a strong or significant move, which engulfed our zone here. Okay, it closed above our zone. Then from there, it was followed by another bullish candle. So always make sure, another one here, another point to note down, is always make sure that the candle that follows your significant candle, it's a bullish candle. If it's a demand zone, always make sure that if it's a bullish candle leaving your zone, it's followed by another bullish candle to show the strength of the imbalance. That shows you that the imbalance is very strong. If it was a bearish candle here, then I won't consider this as a imbalance. Okay, so as you can see here, it was a bullish candle leaving our zone followed by another bullish candle, so that shows that it's a strong imbalance. Another example, we could use this one here. As you can see, we had a drop base rally demand zone with a strong move leaving our price. then it was followed by another bullish candle. This one, it doesn't matter whether it's a strong candle or it's a low momentum candle, as long as it's a bullish candle. Okay, the one that matters on the momentum is the one that leaves the zone. It should always be a strong or significant candlestick. As you can see, this one was following, which shows that it's a good zone. Then another example for a sell setup is this supply zone here. Let us say this was our rally based drop supply zone. As you can see, the candlestick that is leaving our price is a strong candle, but as you can see, the price rejected upward a bit. Okay, but as you can see, it was followed by another bearish candle. It was followed by another bearish candle, which shows that it's a strong or significant move. So always make sure that the price leaves your zone in a strong manner. So it should be a minimum of 2 or more candles that leaves your zone in a significant manner. So if it's a demand zone, it's a bullish candle leaving your zone followed by another bullish candle. So those are the two rules that I will focus on for now to demonstrate to you guys that whenever I apply my analysis, I always use distance. Okay, if the zone doesn't meet these requirements, then I cannot pick it as a high probable zone. So that's our demand zone on NASDAQ. As you can see, I found it on a daily time frame demand zone. Okay, the reason why we are picking this demand zone is because the trend on NASDAQ, it's bullish. As you saw, the price is rejecting from a monthly demand zone, and also it's rejecting from a weekly demand zone, which is within the monthly demand zone. Then from there, on our daily time frame, we had to look for a fresh daily demand zone. So we'll wait for the price to react to this demand zone. If it's not coming back to this demand zone, then we'll have to look for another fresh daily demand zone. So we'll see how the price moves during the week. So that's it on NASDAQ. Then we'll move to gold, which is what most people trade to. So on gold, as you can see, the monthly time frame, price has been bullish. Price has been bullish on gold. The reason why I say it has been bullish, as you can see, it has been rejecting from this monthly demand zone ever since. As you can see, we had this rally based rally demand zone here. Price came to react on it, then it has been bullish ever since. Okay, from there it has been rejecting from hidden demand zones by going up. Okay, so we can say that gold is bullish. As you can also see here, this monthly candle, it's rejecting from a certain area on this level here, but we cannot see it as it's invisible on the monthly time frame, but we might find something on the weekly or the daily time frame if there is an ongoing activity here. So let us check and see why the price is rejecting from that level. So as you can see on the weekly time frame, we can see that the price is rejecting from this weekly demand zone here, which is the reason why price on the monthly time frame it's rejecting. It's because of this drop based rally weekly demand zone. As you can see, this is a very beautiful engulf here. It was a bearish candle engulfed by this bullish candle. Okay, so you can see the price is rejecting from it, okay, on the weekly time frame. So this is the reason why price is rejecting from this level here. That's how you see. Okay, so we can see that on the monthly time frame, price is rejecting from a hidden demand zone, and on the weekly time frame, price is rejecting from a weekly demand zone. Okay, which tells us that gold is bullish. Okay, so if gold is bullish, then we have to look for a fresh daily demand zone on gold. So as you can see, also on gold, we had an ongoing activity here as price was dropping, then formed an activity here around this level here, and also you can see that it was rejecting to this demand zone here on the daily time frame too. Right, so after price came to this level here, it started rejecting to the upward side, of which means it left the fresh zone around this level here. As you can see, the price came to react to it, then started rallying again. So we'll have to look for a fresh zone around this level here by refining on our smaller time frames. So we have a drop based rally here, but it's not high probable. Also this level, you cannot pick it, it's not high probable. So as you can see on the 1 hour time frame, we had a very fresh daily demand zone here. Sorry, we had a very fresh demand zone here, and the price came to react to it, and it didn't leave any fresh zone here. Okay, so which means the price has already moved from this demand zone here. Then we can also evaluate this one by using the very same rules that we applied on NASDAQ, whereby we look at time spent at the level or zone. Then the second one is how the price leave the zone. Okay, so the first area that we'll focus on is time spent at the level. So on time spent at the level, we'll look at the number of candles within our zone. So like I said, it should be a minimum of 3 to a maximum of 6 candles. If it exceeds 6, then you cannot pick it as our zone, of which means time spent a lot of, price spent a lot of time in that area. Okay, so as you can see here, we'll firstly count from this candle 1, 2, 3, 4. So as you can see, the number of 4 candles within our zone. It's 1, 2, 3, 4 within our zone. So we can say that time spent at the level on this zone here is less, okay, as it's 4 candles. Then how did price leave the zone? As you can see, the price did leave the zone with a significant manner, the significant bullish manner. The first candle that left the price or the zone, sorry, the first candle that left the zone, it's this bullish candle here. As you can see, it left with a significant manner but started rejecting to the downward side. But you can see that the price crossed above this base candle here. It engulfed this base candle here, then it was followed by other bullish candles, as you can see, which tells us is a imbalance, right? So this is a greater imbalance here, which tells us this is a high probable zone. As you can see, price came to react to it, okay, in a successful manner. So that's it on gold. So which means if we cannot pick any zone around this level here, we'll have to look for another fresh daily demand zone. So as you can see, at the moment you do not have any fresh daily demand zone. By that, you can take advantage of it by looking for opposing zones, right? You can look for opposing zone around this area, which will make the price to turn and form other opposing demand zones here. So if we had to look for a fresh supply zone around this area here, because we have a rally based drop daily supply zone here, we have a rally based drop daily supply zone here, so we can refine it from the 4-hour time frame. As you can see, we have a rally based drop supply zone around this area. But if we had to evaluate the supply zone here, time spent at the level, it's a number of 1, 2, 3 candlesticks within our zone. But how did price leave the level? How did price leave the level? The price left the level with one significant candle or strong candle, but it was not followed by another bearish candle. So this is not a great imbalance. This is not a strong imbalance, okay? So we cannot pick this supply zone here due to the strength of the price from the zone. So let us keep looking on the other time frames. Maybe we might find something different. So on the 2-hour time frame, you can see the very same zone. We do have a rally base drop supply zone. So on our supply zone, if we were to evaluate it, time spent at the level, we'll say that we can consider this one 1, 2, 3, 4, 5 candles. As you can see, it doesn't exceed 6. It does not exceed 6 at all. So we have 1, 2, 3, 4, 5 candles within our zone. Okay, so the next one that we look at is how did price leave the zone. As you can see, the price left the zone with a significant bearish candle followed by another bearish candle. Okay, then we have a QML here on the left, so we can consider this as our opposing supply zone to this demand zone here. But always remember that whenever you want to take a trade on the supply zone, use low risk or less risk. Okay, do not risk much of your capital. The reason why I say that is because you are taking a zone that is opposing the trend. You are taking a zone that is opposing the trend, because as you can see, gold is bullish. The overall trend on gold is bullish, as you saw on the monthly time frames. Okay, monthly and the weekly time frame. So taking a trade here, it's you taking advantage of it. Okay, there are higher chances that it might fail, there are higher chances that it might be successful. Okay, you must just have to use low risk. So that's it on gold. That's our supply zone on gold till we get a fresh daily demand zone for buying. Then the next one that we'll look at is GBPCAD. So GBPCAD will firstly start on the monthly time frame. As you can see, GBPCAD has been trying to go down after a period of it rallying to the upward side, but as you can see, the current month is bearish. So we want to know why the current month has been dropping. Why is it bearish? So as you can see, we do have a significant supply zone here, which is a rally based drop supply zone, which was tested once, then 3 times here, then 4, 5. Okay, so as you can see, it's multiple reactions. So zones like this are likely to fail because it's no longer fresh. Okay, it's no longer fresh, but as you can see, the price has been going to the downward side. So let us see why the price is going down. So as you see here on the weekly time frame, we do have a rally based drop supply zone, which is beautiful, which was fresh, of which means this reactions here do not count here on the supply zone. As you can see, this was the first reaction which caused the price to go down on the current month. Okay, so in this case, you can also see that GBPCAD has been rejecting from this weekly demand zone here. It's a hidden weekly demand zone. As you can see, we had a drop base rally, then with the drop base rally demand zone here, then price left another hidden demand zone around this area, because you can see we have a strong significant candle away from this level here. So there might be ongoing activity around this level here. Let us check on the daily time frame. So as you can see on the daily time frame, we do have this drop base rally demand zone, but it was engulfed. It's no longer fresh. As you can see, it was violated. Then we have another demand zone around this area here. As you can see, we have this rally base rally demand zone here, and the price hasn't reacted to it. Okay, so this is the opposing demand zone here. So for now, we'll focus on the sells, because the price has been rejecting from this monthly and weekly supply zone here. So if we had to look for sell opportunities, of which means we'll have to look for fresh daily supply zone. So in that case, this is our fresh daily supply zone here. As you can see, this was more of like a rally based drop with a significant drop away from our level here. So let us try to refine it using our smaller time frames. We cannot pick this as our zone, also this. So as you can see, we have a drop based drop supply zone here on our zone. Let me check the risk size. Oh, it exceeds 20 pips, so we cannot pick it. Remember, I said your zone should always be 20 pips or less. Okay, so we have another rally based drop here. Let us check the risk size. It exceeds 20 pips. As you can see, it's 26.4. we cannot take it. Then we'll end at 30 minutes time frame. So as you can see on the 30 minutes time frame, we cannot find anything as our zone here. So which means there is no any sell opportunity on this daily supply zone here. If you cannot find any zone, do not force it. As you can see here, it's very choppy. If you had to use the time spent at the level rule, this wouldn't count, okay? And also here, this wouldn't count due to risk size. And you can also focus on others. The freshness of the zone, it's no longer fresh, it has been tested. You can use so many reasons, okay? So there is no any fresh supply zone here. In that case, you have to wait for the market to move and see how GBPCAD moves, okay? We'll see where it rejects from this week. And so sometimes I barely analyze on Sundays and Mondays. I just wait for the price to move, then from there I can make my decisions. So let us move away from GBPCAD. Let us check EURAUD. So EURAUD monthly time frame, as you can see, price has been rejecting from this monthly supply zone here. As you can see, you have a rally based drop supply zone, and price tested it for the first time here, second reaction, third reaction. So as you can see, the price has been dropping from this level here. On the weekly time frame, let us see, we can still say that the price has been rejecting from this supply zone here on the weekly time frame around this level here, okay? So of which means EURAUD is bearish for now, because price is rejecting from a monthly supply and also rejecting from weekly supply. In that case, we'll have to look for sell opportunities by spotting a fresh daily supply zone and refine it in the smaller time frame. So this is our rally based drop supply zone on the daily time frame, then we can refine it from the 4-hour time frame. So the first zone that we have, you can see it's this one. We cannot pick this zone because of how did price leave the level. As you can see, the price left the zone with one significant candle. There is no other bearish candle following. If there was another bearish candle following here, then we are gonna evaluate this zone. Same thing applies to this zone here. As you can see, it's a very beautiful engulf, but it's only one significant bearish candle leaving the zone. It was not followed by another bearish candle, which means it's a weak imbalance. Then here we cannot pick this zone here. As you can see the structure of the zone, how it looks. So let us keep looking. So we have a supply zone here. First thing first that you check is the risk size. As you can see, the risk size is about 28 pips, so you cannot pick it. Same thing applies to this one, it's about 100. Then we have a drop based drop supply zone here. Let us check it. As you can see, the risk size is about 25.3 pips. We cannot pick it as our zone. We cannot pick this rally based drop as our supply zone because of the imbalance here. As you can see, it's only one bearish candle. Same thing with this one, we cannot pick it as our supply zone. So I hope you guys can see the importance of having to differentiate the strong zones and weak zones. Not every zone that you see on the chart is high probable, okay? Then we have another rally based drop supply zone here. Let us check the risk size. It exceeds 22, so we cannot pick it. So as you can see, do not have any high probable zone around this daily supply here. Same thing applies on EURAUD. You'll have to wait for Tuesday at least, or Monday midnight, then you can analyze to see where the price is rejecting from. So in that case, let me check something here. So as you can see, EURAUD was also rejecting from opposing daily demand. As you can see, we had a drop based rally demand zone with a significant move, and the price was rejecting from this opposing zone. So let us try to look for a zone within this opposing zone. As you can see here, we do have a fresh zone which was tested last week. So let us see. There we go. As you can see, that's the zone, drop base rally. So as you can see, also here we do not have any high probable zone. So this one held the price here, but that doesn't mean the price will hold for a long period. It can respect the level but not hold for a long period. There might be an opposing zone which will make the price to turn and violate this demand zone here. Okay, so I will end it here for this video, guys. I will do another video Monday midnight, which is tomorrow midnight, whereby the market has moved at least, then we can be able to choose proper zones. As you can see now, zones are spotless and it's not easy to analyze for me, for myself on Sundays. So let us just wait for Monday, then you can take it from there. I just wanted to show you guys one of the rules, how did price leave the level, and also time spent at the level, that there are things that you can consider whenever picking zones. Okay, so thank you. Please make sure you like the video, subscribe, please keep sharing, and I promise you guys that I won't abandon you. Okay, I'll be making more videos. Thank you.